Hi there, you're watching Dukascopy TV. I'm Ben Jones. The ECB have decided to keep their rate at 0.25%, with Mario Draghi outlining that the euro area has shown a lot of resilience recently. Joining me on the line to discuss this decision and the ECB president's speech is Pernille Nielsen from Danske Bank. Firstly, Pernille, can I get your initial reaction to the ECB sticking with this 0.25% figure? What do you think has led them to deciding this?
Well, first of all, we had expected the ECB to cut the refi rate today, so we are a bit surprised not seeing anything. We also had expected that they would have discussed stop sterilizing the S&P purchases, but we didn't hear anything. Well, it seems that the uncertainty and lack of information were the main reasons why we did not see any action today. Draghi said that they will publish their forecast for 2016 next month. That's the first time they publish forecasts which are so long. It seems that they will give us more information in the next month.
Now, I spoke to an analyst from Citi earlier in the week, and he said that Citi feel the ECB will actually lower the rate further in Q2, perhaps because of the slightly lower than anticipated inflation rates. Do you think that a further reduction could be a possibility, and how much will inflation figures play a part?
First of all, next month we expect inflation to be unchanged, and it's mainly because energy prices will be a bit lower than we have seen this month. And based on what Draghi said today, this should not imply a cut in the refi rate or deposit rate. He said that as long as the core inflation is stable, they will not act. But we have had an expectation of further easing from the ECB. So again, it seems that he is moving a bit away from the very dovish tone we have had, and now he is more hawkish and focuses more on what part of inflation is going down, and it has to be broad-based for him to react.
And finally, what were the key points to come out of Draghi's speech today, in your opinion? Was there any implication that the current EM volatility may damage the euro area? And did he talk about anything significant that will affect the euro currency?
I think the key points were that the two scenarios Draghi mentioned last month that would cause reaction from the ECB has changed a bit. Last time he said that higher short-term money market rates would lead them to react. Now it's short-term rates going into the longer term. And he also said that medium-term outlook should change, and now he focuses on what part of inflation is going down. So it seems, in our view, the key points are that we have to see more for them to react than we had expected from the comments last month. And regarding the emerging market volatility, he said that it may cloud the recovery in the euro area, but he also said that it's out of the control of the ECB. So I don't think we should put too much into that for the time being. It seems more to be the two other scenarios like we had last month.
Pernille, thank you very much for talking to us today. That is all we have time for, but make sure you click back throughout the rest of the week for even more updates and exclusive interviews. Goodbye.